Hello traders and welcome to another video review. Today is Tuesday, October 17th, 2023. Let's find out what is going on the Forex economic calendar today. LBA meeting minutes has been released overnight, so we will definitely take a look at the Australian dollar today. But we still have some data from the UK in form of the climate count change, employment change, and unemployment rate. As you can see, this data has not been published just yet. German current conditions and economic sentiment data are scheduled for release at 11 o'clock, together with the economic sentiment from the whole European Union or the Euro zone. 10 to 2 supervisory board member Joknik will give a speech. This is the data released from the ECB, and then 10 minutes later we got the FOMC member Williams to give a speech. During the New York session we got the housing starts data, core CPI and CPI data from the Canada. All of them are scheduled for release at 2:30, and at the same time we got the key event of today in form of the core retail sales and retail sales data from the US. Retail sales data are expected to drop from 0.6% to 0.3%, and core retail sales are expected to drop from 0.6% to 0.2%. More data from the US are scheduled for release at 3:15 in form of the industrial production, and then business inventories, retail inventories excluding auto as well. In the meantime, we got some speeches from the FOMC member Bowman. We got the German BUA President Nagel to give a speech at 7 o'clock, together with the ECB, the Guindos, because there is so many comments because there is still a Eurogroup meeting these days. All right, and then at the end of the trading session we got federal budget balance scheduled for release at 8 o'clock, and API weekly crude oil stock scheduled for release at 10:30. So quite intense day, and the retail sales and core retail sales data from the US are the most important data release for the Tuesday, October 17th. So let's take a look at the technical part of the markets. We will start with the euro dollar, then we go to the Australian dollar, and dollar to the Canadian dollar, of course. So let's start with the euro dollar. This is the 4-hour chart of the euro dollar. As you can see, we broke below this short-term trend line support. We tested it and made a new local low at the level of 1.0496. Then bulls bounced higher, tested this local technical resistance 1.0559, but there was no breakout above this technical resistance just yet. We've been hovering a little around this level and then market went lower. The intraday low was made at 1.0535 so far, but we can still, let's say, resume this kind of a movement to the upside and test 100 periods moving average located somewhere around 1.0577. Momentum wise, we hit the level of 50, as you can see, and now the market is hovering just below the level of 50. 48.21 is the current RSI the figure. So basically we're just hovering around the level of 50, trying to break to the upside. If there's any failure to break higher than this level here, 1.0563 will be considered as an intraday technical resistance, and the market would reverse lower and test the lows from the October 13th at 1.0496. So that's the current situation on the euro dollar. Let's find out what is going on the Australian dollar. So 5 minutes chart is showing us some sort of the consolidation, roughly between 6,350, 6,370. Let's find out what's going on the different time frames. There you go. 4-hour time frame is very nicely showing us a bounce from the important technical support located somewhere around the level of 6,288. As you can see, this is the level from where that movement to the upside just started. We broke above the 50 periods moving average. We are approaching 100 period moving average, so there is still a chance for this market to extend this up move. The local technical resistance is located just around this level here. Let me make it thicker. So just around 6,394. So we need to break above this level in order to attack and test maybe this swing high at 6,448. All right, that's the key level for the bears. Of course, how much did we retrace? Let's find out what the Fibonacci is saying, because it looks like we retraced at least 50% of the last wave down. There you go, exactly. We retraced 50% of the last wave down. 6,369 is the 50% the technical resistance level, and there is one more technical resistance. 50% of the Fibonacci retracement is the level, and the 61% of the Fibonacci retracement is located at 6,387 pips. So this is the next target for the bulls. It's just above the 100 periods moving average, just below the key short-term technical resistance. So please notice the fact that those levels might give us very good and very nice basically like kind of an obstacle for the bulls that are trying to rally higher. So that's the current plan for the Australian dollar. Let's find out what is the US dollar versus the Canadian dollar doing. So we got this pair here. There you go, 5-minute chart, kind of a range trading between 1.36, 1.31, 1.36, 15, so kind of a 15 pips trading range. On 5-minute, on a 4-hour chart, we have a typical reversal from 1.37. So let's just take a look here at this current price behavior. What do we have here? We have the technical support, obviously located around the level of 1.3568. We got the other local technical resistance. So this level had been tested extensively, 1.37. Then we have the rejection, and we are now looking to move way lower than this level. Of course, what do we have here is like a short-term trend line resistance as well. So as long as we are below 1.37 and this short-term technical resistance with that kind of a momentum, which is barely neutral and it's a little bit skewed to the downside, we should expect another spike lower, at least to test this technical support at 1.3568 today. Right now we are locked between 50 and 100 periods moving average, so somewhere there the market participants might see the opportunity to push the price lower, or to test this trend line and maybe even break out the trend line again. And last but not least, let's take a look at the Bitcoin. Why? We are looking at the Bitcoin because we wait for the chart to load, and what is this? Euro dollar, Bitcoin. There you go. This is what I wanted to show you, this big spike up, and this big spike up was made on the false rumor from one of the social media cryptocurrency portals, saying that, of course, the Bitcoin ETF has been approved by worldwide known company called BlackRock. It was fake news, so the market rise up above $30,000. The high was $30,529, and then quickly this movement to the upside was faded. We hit the extremely overbought market conditions where that's kind of obvious. But if we put our let's say a range measure, where is my range measure? Somewhere around here, I guess. There you go. Price range measure is showing us that this spike from the lows of the 11 October to the highs was 15%, so that's not that bad. at all. Nevertheless, for now, the market will have to trade somewhere below 28,608, which is the technical resistance, and just above it we got the intraday technical resistance, 28,829. So as long as we trade below these two levels, the outlook is kind of bearish due to the fact that we are trading still inside the extremely overbought market conditions. So the probability of going lower for this market is quite high, because we need to get off this extremely overbought conditions. Nevertheless, you can just see what is the market reaction on the even fake announcement that the Bitcoin ETF, Bitcoin spot ETF, is approved by the SEC, right? So please have this in back of your head when considering analyzing the future price movement of Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.